We broke yesterday's high, 129.7, and then we whoop all the way. We break 52-week high. So we break 52-week high. We come back down. I didn't buy it. And then we come up and we test it, 52-week high. And then we broke above it. This is the area that I went long. The reason I went long here is pretty simple. 52-week breakout is 132. So we broke 132. That means all the shorts need to cover, and they did. And then soon enough, we ramped for $2. And I think 132 calls went from 120 to 240. So I sold my 120 calls. I sold some at 220. I sold most of them at 220, I think. So I made $1, and that was good. The next trade, I was looking at silver. Honestly, I've been stalking silver forever, and I was looking at silver to potentially break yesterday's low. So I was looking at that base that we formed at 75, and I wanted to take it short, but I did not. But right here, this is where I wanted it. So we pop up, we die in silver, we bounce, we come back down, we bounce, and then right here breaks yesterday's low. Then after it breaks yesterday's low, it just slammed down to like 70. Like if I'd taken some 75 puts there, I would have been golden because we were breaking yesterday's low. We had 3 green days, and then 1, 2, 3, 4 green days, and then you take it short. And I did not. I was not prepared to trade this trade, but I wanted it because we just slammed really hard. In like 2 minutes, it's down $5. The next ticker was Walmart. We didn't discuss that. We went and I discussed that. The next ticker is Chow. See, this is where it gets really interesting. Because a lot of you guys are like excited. I teach in my course to buy the pre-market breakout and to buy, a stock that's moving. And in this situation, like I said, a lot of these tickers have been choppy. And this Chow example is a very choppy stock. The reason why it's choppy is because it breaks pre-market highs and then it pulls back. This is an example of a ticker that breaks pre-market highs and pulls back. So not only it traps longs, but now it traps shorts. So it trapped everybody. And I like to discuss that because, a lot of you guys don't really understand like how the manipulation happens. So I'm going to open up with paint. You can see so here. So you can see so here that right here, it's a pre-market breakout, is it not? Right here. Let's call it 85. 85 is a pre-market breakout. You can see so here that multiple times we tested 85. And right here, once it breaks 85, we should have been at 120. But we did not. We broke 85 by a couple pennies, and then we pulled back into VWAP. So we trapped some longs, and then we suckered in some shorts. And then we broke 90. And then we broke 90 once again. And then we trapped again. Some longs over here. And then we suckered in some shorts over here. So this to me is a choppy ticker. But whenever I see a choppy ticker like this, I don't trade it. Because there's too many unknowns. Like a ticker should not break pre-market highs, a multiple resistance point 6 times in a row, and it should not make a little bit of a higher high and then pull back. When I see that, I understand that we're in a choppy market, so I just don't trade it. So soon enough, that was the right thing to do, because we broke out by a couple pennies and went back down. We broke out by a couple pennies and broke back down. We did go eventually to 140, so the bulls did win here, but was it a choppy ticker? Yeah. Did I trade it? No, I just avoid it. I have millions of tickers to trade every single day, and I just don't want to be part of any choppy activity. So I just avoid it. I'm like, this is what I mean. I mean, it held VWAP the whole time, but it's still choppy. Moving on to the next ticker. This is Walmart. I did talk about Walmart. So you can see here how I bought Walmart calls at 120 and then sold at 220. You know, that was a great trade right there. This was a great trade. So I do have, you know, if the market, if small cap stocks are not giving me 10%, 20%, 30%, I have to move on to options. If the market is barely giving me 10% on these small caps, it's not worth it. It's not worth trading small cap stocks with, you know, to make 10%. So I just moved on to a little bit. I mean, I make my money from trading. So, and I don't like to put I don't like to put too much money. It's just like the last week I've only got like under 50% recovery score. So, you know, when I'm under 50% recovery score, I have to size down. So, you know, I just like the volatility of Walmart. So you can see that I did make, you know, about 80% win on Walmart calls, and that doesn't happen every day, but it does happen lately. So you can see that, you know, Chow went here. Then we have EMLK. EMLK is the ticker that's starting to move on Friday. Now, small cap stocks are giving me more than 20%. When the tickers are giving me more than 20%, I'm excited. Yay, I want to trade small cap stocks. And EMLK here, we had some traders buying it at 8, selling it at 10, buying it at 9, selling it at 11. And that's when I get excited. When I see that kind of action, I'm like, hell yeah, 20% in and out, bam, bam. Thank you, ma'am. That's what I want. I don't like choppiness. So soon enough, this ticker popped up. You have a daily breakout of 8. I was just hesitant to buy the 8s. We had some traders buy it at 750 and then sold the 10s, and they bought it again at 9 and sold it again at 11 or 12. Soon enough, we got up to 13 before sadly selling off. So I like to see more of this. This is what I like. This is what I like. But when I see more of this, I'm more excited to trade because I can't trade 5% chop. 5% chop is not enough for me. So we had another ticker, like you can see like what has happened lately. We have lately what we have had. We had FSLI. So FSLI was a ticker that we had good earnings on. We had a really nice daily breakout of 12.5. And you know, the expectations were negative earnings, negative 12 cents a share, and they released positive earnings of 20 cents a share. But the ticker had 140 milli float. So, you know, it's a highly institutionally owned stock, you know, 70% institutions. And so the amount of float available to trade is only like 40 million. So it did move like a 40 milli float. We pop up, we break the 52s, we pop up, we break 14s, and we got up to 17s, and now we're like 19. So the thing you want to get out of this is like, you see a stock that's having a daily breakout, you know, even if it has 135 million, like, you know, most of my tickers in my course are under 40 million. Rarely I trade stocks over 50 million. And if I do trade stocks over 50 million, I'll probably trade them short, especially if they're gapping up so much. But in this situation, FSLY was highly institutionally owned, 71%, and it had earnings. So that's like double whammy not to short. So for me, it was more of a no trade, even though it was a great trade. And soon enough, we have had a sympathy other earnings winner, which was this one, CSLI. What was it? Where is it? This is the ticker that I was looking at. Corsair. Corsair is the manufacturer company, the company for, you know, electronics or whatever. This ticker popped up in the aftermarket. We hit VWAP, and it did give from 650 up to, so it did give about 10%. But I didn't really like the chart. So we had sympathy, good earnings, momentum. That's what we had on Friday. The next ticker we're gonna look at was Rhyme. Rhyme was in the aftermarket. You know, now we're getting into that. You know, hopefully we're gonna get one of those 1,000% movers, 10,000% movers, and that's when things get exciting. There's no real reason, you know, there's no real resistance in Rhyme up until we get up to technically, what is it? Like 11 or 14. Like look at this daily. The daily looks great. There's no really resistance up to like 11 or 14. So I'm excited to see Rhyme next week, especially when you have a 3-day weekend.